Luna was once a cryptocurrency sought after by hundreds of thousands of people whose market value was as high as 40 billion US dollars. Recently, there has been a sudden and continuous cliff-like plunge without warning. Its price has risen from close to 90% in just a few days. Today, the US dollar plummeted to less than $0.00011, and tens of billions of dollars in assets were instantly wiped out. The collapse of Luna not only caused hundreds of thousands of users to lose everything, and it caused an earthquake in the currency circle. In the last video, we introduced the reason for the collapse of Luna and UST. In this video, we will review the entire incident. Let's take a look at what happened to them during this period. 40 billion US dollars of assets returned to zero. Is it a natural disaster or an unnatural disaster? Before the crash, Luna continued to set records for price increases even in cryptocurrencies, generally depressed the market conditions. This abnormal surge against the trend has also attracted the attention of some short-selling institutions. As mentioned in the last video, people buy UST because of the 20% deposit interest rate, resulting in many UST locked in Anchor to earn interest and not circulating in the market. To change this, Terra injects liquidity into UST by burning Luna, thus keeping the price of UST stable. While this worked, there was also a huge hidden danger, and it was this hidden danger that caused the crash to happen. As we mentioned in the last video, compared to the downturn of other cryptocurrencies, the 20% annualized interest rate in the Anchor protocol is particularly eye-catching, which has led to the growth of deposits on Anchor far exceeding the growth of borrowings. Although the project team tried to improve the borrowing enthusiasm of Anchor users by upgrading the borrowing mechanism, this incentive failed under the influence of bear market pessimism. As a result, the Anchor protocol has a much higher deposit volume than borrowing volume as a lending platform. The loan interest income cannot cover the deposit interest rate expenditure, resulting in a massive gap between the income and expenditure of the agreement. So how do you pay the savings interest of the committed users? The answer is reserved. When the reserve fund is insufficient to pay users' interest, people usually choose to take out UST and exchange it for other more stable assets. And when some people start doing this first, signs of UST price instability will occur, and the pandemic that will follow will start to spread. When people begin to sell UST to Luna frantically, it will cause the UST price to break off, and the supply of Luna in the market will surge, causing its price to fall. When the price of Luna continues to fall, and the market value is close to or less than UST, people will be affected by panic and sell UST. The death spiral will begin at this time, and the consequence is that Luna and UST all fall into the abyss, unable to extricate themselves. A full recap of the Luna and UST slumps. When we understand the logic of the whole event, we will find that collapse of Luna and UST is not accidental. According to related news reports, when many USTs ambushed in Anchor in advance were sold, a hunting operation against Luna was announced. On May 8th, LFG withdrew $150 million of UST from the UST 3CRV liquidity pool to form the 4CRV liquidity pool, resulting in a drop in liquidity. Subsequently, a new address suddenly performed a swap of 85 million UST and USDC, which was equivalent to another USDC loss of $85 million, which seriously affected the balance of 3CRV liquidity pool. Therefore, to maintain the bilateral symmetry of the 3CRV liquidity pool, LFG did not add USDC but removed another $100 million in UST from the capital pool. At the same time, multiple whale accounts began to sell UST, resulting in more than $2 billion in UST flowing out of Anchor that day continuously. Affected by sell-off, UST began to de-anchor from the dollar and panic became prominent. As a result, people started exchanging their UST holdings for Luna, causing the supply of Luna to increase and its price to drop to a low of $59.58. 4CRV is a new proposal by Terraform Labs member Izon to the community to introduce a new gold standard for a pool of stablecoin liquidity. 4Pool is a new curve liquidity pool consisting of UST, BRAX, USDC, and USDT. On May 9th, LFG announced that it would use the Bitcoin reserve funds to loan $750 million to help stabilize UST, but the sell-off still did not end, and the de-anchoring situation of UST further deteriorated, falling below the $0.98 on the same day, and the panic of users intensified. They exchanged their USTs for Luna, causing the price of Luna to drop by more than 50% again, and the death spiral began. On May 10th, nearly $6 billion of UST fled from Anchor. The price plummeted to a new loss of $14.15 again, and many users began to buy Luna at the bottom. Subsequently, UST completely de-anchored and fell to $0.68. On May 11th, Do Kwon tweeted that he could not save the market and could only rely on the arbitrage mechanism to help restore the price of UST. Luna price fell again by more than 95% below $1, and UST plummeted to $0.29. On May 12th, Luna continued to fall by more than 99%. The currency price almost returned to zero, and the USD price dipped below $0.2. On On May 13th, many cryptocurrency exchanges delisted Luna and suspended trading, and the Terra public chain was shut down. On May 14th, Do Kwon tweeted that he did not sell any Luna. The team was sorting out the reserves and usage, preparing a new proposal to help Luna rebuild, and then the price of Luna began to rise. On May 18th, Do Kwon tweeted that the number 1623 governance proposal to rebuild the Terra network was up to voting. It proposes a hard fork and removal of stablecoin mechanism. The existing chain would be renamed Terra Classic, token to Luna Classic, LUNC, L-U-N-C, and the new chain will continue to use Terra Luna. Holders, stakers, and developers conduct airdrops. At present, the voting process is leading in favor of votes. Coinverse will continue to pay attention and will share the voting results with everyone on our Twitter. Worsening bear market. The collapse of Luna and UST added to the already bearish cryptocurrency market. After Luna plummeted, investor confidence in the entire cryptocurrency market suffered, causing several cryptocurrency prices to fall. Adding Coinverse's view, the aftermath of this crash may not be just that. The fall of UST may usher in the darkest moment for the already precarious algorithmic stablecoins. As the algorithmic stablecoin with highest market value in the market before, UST's return to zero process made everyone genuinely feel the power of the death spiral. Therefore, it is foreseeable that if the model of algorithmic stablecoins does not undergo revolutionary changes, it will be highly marginal for a long time to come. Furthermore, the financial risks exposed by Luna will also stimulate the tightening of regulatory policies again, which may take a hit on the entire cryptocurrency market. Coinverse is the world's first value discovery community in the blockchain field. We reviews and judges public chains and high-quality projects objectively and fairly. All content of Coinverse is for reference only to community users, not as investment advice.